In this video, we are focusing in terms of business documents. Let's go through the learning objective for this video. First of all, recognize and understand the use of invoice, debit note, credit note, statement of account, cheque, and receipt, etc. And then how can we complete and also using all these documents in order for our next step, which is the double entry and also the right entry. So in the earlier of the course, I mentioned that in accounting, almost everything we need proof. In fact, the proof actually is something that today we will talk about in this particular video. Okay. In terms of business document, the definition is the document received or issued by a business when a transaction takes place. So when it contains information relevant to the transactions, things happen, actually you need a proof. So you need all these business documents in order to track and also record all this information. Okay, let's come into the first document, which is invoice. A document issued by a business when making the credit sales. In the other word, if let's say the transaction, that means the sales and purchase, it doesn't involve in credit sales, it actually is a cash sales, then you don't need to issue invoice. Trade discount. A discount given by one business to another business is calculated as a percentage reduction in an invoice quantity. Okay. So when we do a business, when we do a transaction, sometimes we might want to encourage the customer to pay earlier. So there are certain business, they will say that if you pay within a month, I give you 5% discount. Or you pay in 3 months, then I give you a 2% discount maybe. This process is to trigger and encourage the customer to pay earlier. Why a business needs customer to pay earlier? It will help in terms of improve the cash flow so that they can have all this cash flow in order to do other transactions. Let's have a look of the invoice. Right. In right, you will see there is an invoice sample. In this sample, you're able to see that the issue to means this invoice actually giving to a customer, and this sample issue to is to the customer, the company name or a personal name and the address. Besides that, pay to means that I'm the business, I want to receive the money, which is normally means that the business who are making these sales, making this invoice, I want to invoice you, so you please pay to me, which is my company name and also the address. You definitely will able to see date of this invoice in this particular sample or any other invoice. Also, invoice number is so critical in the documents that later when we do the double entry or etc. So documents reference number is critical, and later I will explain why it's so important. And in the invoice, you also were able to see all the details of the sales. For example, in this sample, like rent consultation, 1 unit is $100, etc. And in invoice sometimes will indicate that the delivery cost when it actually involved in some other delivery cost or maybe even installation fee, etc. You involve all this, maybe not relevant directly to the sales itself. There are many invoice currently in the business. It also indicates that the payment information. For example, I want my customer to pay me into this particular bank account. I will put inside the invoice say that please pay to this company name with the bank name, maybe Singapore Bank or CMB Bank, etc. And also the account number. so that when you receive this invoice and when you want to make a payment, it's so convenient that in the invoice it will that for you. Any other thing, like for example, if you pay later than certain agreeable term, then maybe there is an interest charge to you. So this is one of the things that you need to take note inside the invoice as a business owner. All right. Over here, just now we mentioned about discount. Not sure you notice that there is a trade discount of 10% in this sample. So it actually based on the uh, total of this particular value of this invoice and reduce the 10%, and there is a sum total at the bottom of it. Right, so this is sample of the invoice. Let's go to the next document that we want to talk about, which is debit note. All right, a document issued by a business to a supplier when the goods received are unsuitable. Just to let you know on that, actually debit note maybe not because of the goods is not suitable. It maybe is the wrong product being delivered, okay, or the customer not satisfied, or maybe the business actually realized that means the customer realized that the invoice received the amount is overpriced than compared to the agreed price. For example, upfront, uh, the seller agreed to sell to the buyer at the cost of, let's say, the price of $10, but in the invoice, actually, maybe someone took it wrongly and put it as $20. So the invoice is $20, transaction being made, but that is not right. So the customer issue a debit note to the sellers who says that, hey, we agreed it's 10, but now you invoice me as 20. This is my debit note. Please reduce 10 so that we can come to the balance of 10, which is our agreed price. So this is a request, a debit note, which is a request from the buyer to the seller to say that something, the amount is not right, or maybe the product is not correct. So I want to return the goods. So this is the amount that we are looking at. In some of the debit note, it will indicate that why I want to do this debit note, what is the reason, and also um, the amount of it that I want to deduct. Normally, in this debit note, if let's say it involves certain invoice, the reference number, they will indicate into the debit note as well to tell the seller that this is the invoice number they are referred to. Now you know why I say this is important that all the business documents need to have a reference number. With the reference number, it helps a lot for the bookkeeper to track all these documents and also the transaction. Right? And just like to extra notes to you, debit note is a request from the customer to the seller. So it doesn't require any double entry at this point of time because it's just a request. It's not confirmed yet. All right, now I'll give you another example with when after, let's say, I request for a debit note, a customer issue a debit note, and the seller agree with it. That means I agree with your request, and now the seller will issue a credit note. All right. So this credit note actually is a document issued by a business to a customer when goods are returned to the business because they are unsuitable. As mentioned, this is a definition in Japan. So you have to write in this way. But actually, there are many different possibilities of a reason whereby the credit note being issued to the customer. For example, just now the example I show you, the agreed price is not matched. That means the seller invoiced the customer double amount. So the customers issue the debit note to the seller, and now the seller issue the credit note as a confirmation to the customer and says that yes, this is the amount I agree to deduct from my transaction, which is maybe it refer to particular invoice or maybe not. All right. So this is the credit note. Inside the credit note, as we can see here, we will definitely put in the customer information, the date, the address. This is very particularly needed. We also will indicate the credit note number 2, the date of of this credit note, so that it tells that the business, the customer, this is the date that I agree to do the credit note to deduct the amount that you owe me. All right. So of course, in the sample, it says that please thank to your customer. All right. All right. So here is another example. Some of the business, after a while, there is so many transactions happen. For example, the invoice to the customers, there is a sales, and then at the end, the customers originally this much, and then they pay, some customer pay here and there. So there may be a bit of confusion. So a statement of account come into the picture in order to help both parties to understand a little bit better, especially this document is issued to all the customers still owning money to the business. It contains details relating to the transactions taking place between the business and also the customer. All right, let's look into this particular example. This example is from Unimatch, which is the seller, to the customer, which is ACAD Engineering Sdn Bhd. Right, this customer is ACAD. The seller is Unimatch. So Unimatch issued this statement of account, these documents to ACAD to inform ACAD what happened to during this period of time, what happened to your business, to my business. All right. So you from here we can see there is a balance brought forward, balance BF in the first row, which is 3,500. In the other word, from the date before of these documents, it means that there is ACAD already owning Unimatch certain amount, which is 3,500 to Unimatch. So ACAD by right have to pay off, still own money to Unimatch, which is 3,500 in the beginning, from the start of this document. And you can see below there is an invoice number for 5 particular invoice number transaction happen, which about 19,000, 7,200, etc. So they ask transaction. That means ACAD after the balance carry forward 3,500, ACAD still continue purchasing from Unimatch for 5 particular transactions. All right, for all this amount of invoice to from Unimatch to the ACAD. So in statement of account, it indicates which invoice number. Remember, I mentioned all documents invoice number is the reference number is very important. All right, then after that, something happened. The 6th transaction, it actually says that UMBC Bank in the 19,000. In the other word, the 6th transaction is saying that I can actually pay to Unimatch, and Unimatch found this payment. Okay, there is a bank in. That means Unimatch having an account in UMBC Bank, and then I can pay to Unimatch bank account, which is 19,000. So there is a reduction of this particular day and with the 19,000. So in the last column, you see the balance has reduced. Okay, got it? So the balance has reduced, the owning amount is reduced by 19,000. On top of that, I can actually make another payment to Unimatch, MBB Bank, okay, with 3,500. And then below that, you see MBB 459,388. This is a reference number. It actually says that this is the transaction number that MBB Bank is for this 3,500 bank in. So the amount further reduced to the owning is further reduced to 40,900. So statement of account for me as a customer ACAD is very useful. It actually tell me that Unimatch, they recorded the transaction, and now from this particular statement of account, For me, as a customer, I know that I still own uni match of a balance of 40,900. This is something that I have to pay them. In business, without sometimes when the transaction is a lot, you might miss one or two documents or transaction record in your bookkeeping account. So with this statement of account, it helps a lot for us to double check all the things. And for example, let's say I can actually make the third payment, but in this statement of account, I don't get it, I don't see it. So I know that Unimatch didn't recognize and realize that actually I already paid. So it's so critical and important to have this statement of account. We also short form as SOA to confirm and to double confirm that whether my customer or my supplier, they were all these things, whether it's correct or not. So double confirm is really, really important. Okay. The next thing, the next document that I want to introduce here is check. In today's business, maybe we don't see many of check involved in B2C, which is business to consumer. But I believe that check for B2B is still quite a numbers of it, still very common that many business still using check, issue check. So here is the definition of the check. A written document authorizing the payment from the, sorry, there's a spelling error, from the bank account of a business to another person or a business. So check can issue to individual or to a company, that's fine. So here is the example in right. Check, definitely there is a check number. Again, reference number is very important. It also, it will indicate a date. The date normally is the date that the, the, the bank account, the check issuer, agree to the bank to pay the receiver. That means pay to the pay to who, but the date indicate. For example, you got a check of 1st of January, but in the check itself, the date indicate that is dated, which is 20th of January. So it doesn't mean that you can get the money on 1st of January, but the check says that it's 10th of January. You have to bank in a little bit earlier or maybe after in order to tell the bank that I want to receive my money 10th of January. All right, you don't expect money anything earlier of 10th of January. So the date also critical. And if you do notice that in the number 6 there is double, we call double line cross the check. Cross the check means that the issuer of the check telling the bank, please don't simply, you have to pay this particular check amount to the particular payer, pay to the individual and business according to the check. Okay, without crossing, actually, it's possible that to bank into other account, but with the cross number 6 there, it actually refer to a particular personal or business, which is written in number 2, which is pay to who. Right. Then number 3 is the written in English or Bahasa or any language in words of the amount. And number 4 is the amount in number of how much the value of this particular check. And lastly is the signature. Signature is really, really critical to authorize this particular business document. Some of the bank account required one signature or more. So you will see some of the check having more than one signature. And it's very particular that the signature has to be accurate. Without the bank people really check that. If they don't, you maybe will take some action to confirm whether this check is authentic. Right. The next thing is after you got the check, you maybe want to bank in the check into particular bank. For example, just now the example is my bank. So I will take the check all the way to my bank. I want to bank in. And when you want to bank in, you have to get bank in slip. It means you have to paying in slip, issue and write and fill in the bank paying in slip. A document used to deposit the funds for check notes or coins. It means it can be cash, right, into a bank account. So I got the check just now. I want to bank in. I want to pay in. I have to issue a fill in a paying in slip. In this paying in slip, sorry, I got this another example, another bank example. In this paying in slip, actually it require you to indicate which account you want to bank into, right? No matter in check, no matter in cash, okay, and then the total amount of it, and then you have to. If let's say there is a check, so there is a check number, right? You have to indicate in this document too. All right, but just to let you know that due to in Malaysia there is so many machine, right? So majority of this transaction, like actually it looks like this and no longer need to fill in the paying in slip anymore. Upon the point I insert the check or the cash into the ATM machine, actually the machine will print out this sample to me as a record of I already bank in. After you bank in, sometimes, especially check, it doesn't mean that you go through the transaction is confirmed. No, it's not, because maybe the bank will reject the check. Okay. As on some more, maybe the check is wrong, or maybe your paying in slip fill in wrongly. Yeah, there is all possibility of wrongly made mistake uh, possible to happen in the business document. So you have to be extra careful in this kind of business document when you fill in. All right, now come to the next business document which is so common called receipt. All right, in the description is a written document issued by a business when it receives a payment as a proof of receiving the money. Okay, in the other words, this is just to confirm that I received money, no matter in cash, in check, or in what. So once I confirm that I received the money, I will issue this particular document, which is official receipt, to my customer. All right. And in this particular sample, okay, Unimatch received a bunch of money, which is 3,500. Can you see that there is a check number, NBB 459,388? So in this receipt, it indicates the check number and issue to ACAT Engineering, all right, with the return and then being payment for an invoice. Sometimes some business they will even put in the invoice number that referring to. All right, there is a receipt number in the right top there, and the date of it, and the account of it. Account normally refer to this particular customer account, right? And normally it actually will have someone sign on it sometimes, or it's a computer generated things. And then here is the bank statement. I like this document a lot as well. Remember just now I said that it's not all the transaction after you bank in, for example, a check you bank in, you consider a confirmed transaction. No, there are so many possibilities that the bank maybe reject the check, so you don't get your payment. So a bank statement is so critical for me to double confirm that the transaction being happened. All right, have a look of this particular sample here as for CIM. It's so friendly. It actually, one of the column in the middle, it indicates its withdrawal. So you can see that a business having a withdrawal for 200. It will also tell you that now after the withdrawal balance is how much, and then you can see there is a deposit. It's a check deposit for 4,500. Then it will say that this is 4,500. Okay, and then after that, they pay to somebody. Okay, you can see there is a withdrawal of 500. Sometimes it can be online transaction. It will definitely anything happen to this particular bank account, bank will indicate it accordingly. All right, now that's all the documents that we want to talk about. And here is some of business table that help you to understand better how you're going to use all this source of information, the business document, for your double entry. Let's have a look at the first one. Let's say the invoice is a sales invoice, all right, to your customer. And now the double entry is you have to credit to the customer's account in your book, and then you debit to your book in sales account, right? And if let's say the invoice you are receiving from your supplier is a credit sales, right, from your customer. I'm sorry, for supplier. So what you need to do is debit your purchase and you credit your supplier because you start owning money from your supplier. And then when you issue a check, right? So your cash, I mean your bank, your money in bank is reduced. So you have to credit. And on the other side, it depends what is this payment for, this check payment for. It can be you payment to the supplier, then of course you debit to your supplier. But this payment, if let's say it's expenses, for example, you are paying the electricity, then the account to debit is the expenses account, for example, like electricity. All right, I hope this makes it clear. Then the next example, you receive a check. Okay. You receive a check and then the check is confirmed in the bank statement, then you debit your bank account and credit the customer because the money you receive, your bank increase, so it's debit. And then the other side is you have to indicate who pay you. For example, just now the case is AirCat. Okay, and AirCat, the particular account, you have to credit it, right? Credit note. So let's say AirCat bought from me, Unimatch. All right, and then there is some sales return happening. So in debit side, you need to debit sales return and then credit the customer. Or receipt, you receive some money. That's why you issue a receipt. Am I right? So there is a transaction happen whereby my bank or my cash increase. So you have to debit it. It's an asset, so you debit it. And then you need to tell the particular bookkeeper saying that this money is coming from who. All right. If let's say the money is coming is actually sourced from the customer, which let's say the example that we have is AirPad, then you have to credit to the customer. So it depends what is this source of money coming from. The paying in slip. So again, you are doing the paying in to the bank. The money increase, right? So the bank have to debit. And again, same just now like the receipt, you have to indicate this money actually coming from who, which customer pay you this particular money. So you also credit it. Lastly, the bank statement. Bank statement is for you to double confirm all the transactions. So if let's say in the bank statement, you found out that there are some money coming in and then you haven't recorded yet, then in your bookkeeping, you have to put in debit side for bank because increase. Or you realize that there are one transaction missed out that you have to credit in the money, either withdrawal, that means money paying out, you didn't record it, so they have to credit it. So this is how all these business documents impact to your particular double entry. So this is a summary of it. It's so critical. I hope you don't memorize this, but you have to understand it. You have to understand that the particular document is for what purpose, and then from there you start to imagine and the A asset, liability, and also the equity table, debit side, credit side. Then to see whether this particular transaction it involves which two particular tier account, then you only decide which one to debit, which one to credit. All right. So I hope this makes it very clear. Shall there be any questions? You're welcome to put into the comment of this video. Thank you very much. Okay. Before we end, what do you think? What document will no longer be needed for a business to make which is does not make credit sales or debit purchase? Which document no longer be needed for a business that does not make credit sales or credit purchase. If let's say you are running a business or in cash term, which of the documents above is not relevant? I believe the first one and the second one is not relevant because if let's say you are selling candy at a store, and then your customer is the student, they pay you cash, all right? So you no need to issue invoice. So the first and second, no, all right? But the check maybe, which is a student really quite likely will pay you with the check, right? And then so the number 3, the check gone, and then credit note. Credit note. Let me see. Also quite unlikely but possible, which is after you sold the candy and then they return it and say that this is spoiled or this, so you have to issue the credit note maybe. But because you are doing sale, the cash transaction, so credit note is not required. But receipt, yes, receipt is confirmed no matter you are. When you receive money in cash, so receipt is confirmed. But you maybe don't need, maybe yes, because after you receive the cash, you have to go to the bank and bank in. Then maybe you paying in slip also possible. Bank statement, yes. If let's say I receive the money, the cash, and then I go and bank into a bank account, business bank account, yes, bank statement definitely exists. So this is something to just hope that you can have a second thought. All right, that's all for today's video. Thank you very much, and I hope you have a nice day.